All right, team. So today we have the FOMC Minutes report. Goes live at 2 p.m. Eastern Standard Time on the dot. And yeah, we'll see if we get anything good from this, man. Fed Minutes report goes live today. And yeah, let me know what you guys think. What's up, Adam? What's up, Dota? Buy gold. We'll get some music playing here. Yeah, we're gonna do a poll like we always do here, basically. Yeah, we're gonna do a poll like we always do here, basically. The market react well to today's Fed meeting minutes report. Yes or no? We're also gonna do a Twitter poll here as well. Do me a favor, bump the like button if you can. We appreciate it. Market has been pretty weak today. Tesla's not doing that bad, honestly, but the market's pretty weak. Make this 2 hours. All right, so we got the poll live. Vote on that poll as well. We got the Twitter poll live as well here. Most people think it's going to help the market. Most people think the market's going to react well to it. Hey, thank you, Crypt. What's up, Global, Steven, Crypto, Dota. Well, Disney's down today, but it's not down that much. I mean, it's pretty flat. It's at 89 bucks or so. Yesterday it had bigger drops, but again, I told you guys, I showed you guys my exit earlier. And then yeah, the FOMC Minutes report goes live at 2 p.m. on the dot today. It's basically a recap of the last Fed meeting. It'll affect Bitcoin's price from basically how the market responds. You know, the market response will influence Bitcoin and vice versa. So we also have Nvidia earnings right afterwards, and so we're gonna be busy, man. Just bought more Bitcoin. You think it's gonna be long? I don't know. Again, I really don't know what the numbers are gonna be. Looking at our poll numbers, most people are bullish on this report. We got a report on Twitter as well, or we got a poll on Twitter. So far, about 67% think it's gonna help, 33% think it's gonna hurt. So we got some views here. What do you think about Zoom stock? I mean, I think most stuff is down today on debt ceiling talks. The argument is like, does the market rebound once the debt ceiling gets settled? That's the real question. Like, does the market rebound once today's debt ceiling stuff gets settled? I think that's the real question. And I don't know. I hope. I think they've never defaulted before, and so I doubt that's going to happen. But anything could happen here. Nobody really knows what we're going to get, and yeah, we'll have to wait and see. Is that still going on? Is that meeting with Yellen still going on? Yeah, I don't know. Again, we'll put a timer up so you guys can see when the report actually goes live, which is going to be or goes live in about 16 and a half minutes. Or no, I'm sorry. 46 and a half minutes. So we got the timer here. This is when the Fed minutes report goes live. Tesla up today. We can look at like the Q. Here's the Q. Q's down. We can look at like gold. Gold is down with everything too, which is surprising. Gold is down. PayPal weak, but you know. Yeah, so this isn't actually a Fed meeting. This is a Fed meeting reaction. So this is a reaction like report to the previous Fed meeting. Is what this is, you know. We also got Nvidia earnings later on today, so y'all be ready for that too. It's a busy day, it really is, man. We got a lot of stuff going on today. All right, guys. So Bullish view expected. I don't know. I think the market's down a lot. I think it depends on how the market reacts to what happens during the debt ceiling talks. Yeah. Yeah, we got Nvidia earnings today, and then we're doing a crypto show afterwards. So we're gonna be busy, you know. Basically, today is no break, but it's all good, man. Honestly, I run this community, but I do well. Like I really do. Like I'm not trying to. I'm not gonna be too self-righteous here. Like I do pretty well, you know. It's a blessing for me and my family for sure, you know. And so if I gotta work, let's see. So we streamed for 4 hours this morning. Fed minutes report will be a couple hours, so that's 6. Nvidia earnings might be 3 hours, so that's 9. Crypto show might be 30 minutes. So we'll work about 10 hours today. That's all right. It's all good for growth in the channel. You know what I mean? It really is. So, yeah. Anyways, Fed minutes report goes live right at 2 p.m. on the dot. It's a FOMC file that details why they chose to make the last decision that they did. If you look at the actual calendar here, let me show you guys what it looks like here. So if you look at the last Fed meeting right here, so here's January, February. Here's the March meeting. Here's the May meeting that happened at the beginning of this month about 3 weeks ago. You can kind of see the press conference if you want to watch it right here. So you can see the last minutes report from March right here. So here was the March minutes report. Yeah, you can click it and see HTML. It'll kind of give you a big detail. It's a lot of pages here. And then we'll post the cliff notes as we get them. So we'll read it. We'll post the cliff notes, watch the market response here. That's what's today. And I will put this link up so people can see where to get it in the chat as well. I think that'll be useful also. If you want to access this, you should be able to refresh and find it now in the description. Oh yeah, if GDP comes in light, then it's going to be pretty big drops for sure, without question there. All right, guys, they almost did increase the rate last time. It feels like they'll be positive on their future expectations. Yeah, I think most people are expecting no rate hike so far. Now, it's still pretty early. So it's still early in the day, or it's still early relative to when the next FOMC meeting is going to be. It's still pretty early, but yeah, I mean, anything could happen. They could change their tune. Again, we have multiple big important releases here coming out over the next couple days here. Today we've got Nvidia earnings, we've got the Fed minutes report, of course, and then we also have Nvidia earnings after the Fed minutes report, which we will stream the entire thing as well. We also have GDP data tomorrow, jobless claims data tomorrow, PCE core data tomorrow or Friday, not durable good orders Friday as well. And then next week we got stuff too. And so leading up to the next Fed rate hike decision, we're going to get a lot of different stuff. There's a bullish sentiment, right? I mean, I don't know. I don't know if there is a sentiment here. This is just the last rate hike decision, so they'll probably talk. They probably talk about why they chose to do that, why they're making decisions that they did, all that stuff. All right, so look at Q, Tech, SPY starting to move up in anticipation of this. So we'll see if this means anything. What's sleep? I don't even know what sleep is, bro. Who's sleep? What's sleep? What are y'all talking about? You know, I don't know what sleep is, bro. Honestly, no. On a serious note, I get a lot of sleep, dude. I fall asleep early. I get 7 hours. I'm like OCD with my sleep, dude. Like I need my sleep. You know, I turn my phone off when I sleep. Like I need my sleep more than anything. And so I'm one of those people that if I don't get 7 hours, I am going to be in a terrible mood the next day, a horrible mood. And so I have to get my 7 hours of sleep. It makes me, to have the energy to run this community, I need 7 hours. And so I'm pretty weird about my sleep. I need to get it, you know. Bullish sentiment. I don't know if it's bullish or not. I hope bearish. I'll go long on gold. Yeah, gold's down today. I mean, maybe we get some bounces here. I don't know. A lot of stuff's cheap right now, though, in my opinion. We got some cheap stuff right now, but who knows, man? We'll see what we get. I'm not saying anything's going to happen. I really don't know what we're going to get here. And, yeah, again, Fed Minutes report goes live at 2 p.m. Eastern Standard Time. It is a PDF file / HTML file that goes live right at the dot of 2 p.m. Details why they made the decisions. We'll detail all the cliff notes, all the data, all the sentiment reporting in that report, and we'll see what happens here. There might be a timer on the top left screen. There could be. Might be. Yeah, I don't know if we got bullish or bearish sentiment too either. I really don't know, man. I'm not really biased in any direction right now. I guess short term, I think we're a little extended on the downside, but who knows? All right, guys, so SPY testing that VWAP here. The Q is testing the VWAP. SPY is as well. And again, we talked about this level, the 200 EMA and the volume-weighted average price. This is a pretty big level. Nvidia stock, yeah, so Nvidia has earnings today. So again, we do have the Q dipping down under the VWAP, under the 200 EMA. Yeah, I mean, Nvidia's just up a lot, man. If we look at Nvidia here on the, here's the Q on the left side here. We can put Nvidia up on the right. Nvidia's down today, trending with the market, but it's been on a huge tear. Here's a 20-day chart for Nvidia. So this is just 20 days, I think. Oh, no, this is a 180-day chart. So here's the last 180 days of Nvidia here. Just crazy big momentum and moves. Huge run. We got the FOMC Minutes report, guys. PTON down to 690s here. We do have gold starting to move up. We'll look at render later. We're going to do a crypto show. So if you want to talk about render, we'll stick around to the very end of our streaming today. Again, today we got Nvidia earnings, Fed Minutes report. We got a crypto show we're doing. And we'll talk about render for sure. Yeah, Q's at 330s here. Nvidia at 300s, 350. So Nvidia's still over 300, but pulling back a little bit ahead of their earnings report. I guess the question is, does Nvidia bounce back? Looking at our poll numbers here, we got almost 300 people here already, and we still got like 35 minutes before the Fed Minutes report. 61% are saying yes, the market does react well to this report. 39% are saying no. We also did a Twitter poll live here as well. We got some votes on that one already too. 67% are saying it's going to help the market. 33% think it's going to hurt the market. Again, so it looks like most people are bullish leading into this Fed minutes report. And the Fed minutes report, it's tricky. It's tricky to tell. A lot of the time we get chopped from it. Sometimes we'll get movement though. So this isn't a meeting. This is a reaction to the meeting. So this is a report reaction to the meeting is what this is. All right, guys. So again, Nvidia up to 300.4s. We got the Q at 330.40s here, 330.40s. Again, SPY rejected under the Q or under the 200 EMA. You can see this rejection here right at the 200 EMA. VWAP, if you want to see why I watch the volume weighted average price, this is why. I mean, look at this rejection exactly off of the VWAP on the Q here. We can also look at the S&P 500 to see how it's moving relative to all this stuff. Here's the S&P right here. Again, here's the S&P. Rejecting right off the 200 EMA. And so if you want to know why I watch the 200 EMA, if you want to know why I watch the volume weighted average prices, because in my personal opinion, they are the two most influential indicator levels that you have on any given chart. The most volume of traders are watching them. So you got the most people watching them. You got, the biggest reactions to them. Okay. So yeah, you got the biggest reaction to them. What do people think of Neil deGrasse Tyson? I think he's smart, a little pompous with how he is, but smart nonetheless. And, so this is, okay, so let me put some perspective here, guys. So here's the S&P 500 on the right. Here is the Q, which is a tech-based ETF, similar to the S&P 500 on the left. And so every 6 weeks, the Fed raises or lowers rates depending on how bad interest rates, or depending on how bad inflation is. The Fed will raise rates, they'll lower rates. If inflation's really bad, they'll raise rates. The whole reason they raise rates is to make it more expensive for banks. And when they make it more expensive for banks, the banks raise interest rates in order to compensate for that, that lack of profit, so to speak, right? And when they raise interest rates, everybody's affected. People stop buying as much, and that lowers the cost of things because, supply and demand, when things are more expensive, less people buy them. And because of that lack of spending, businesses in turn lower their pricing to compensate for it, thus completing the rate hike objective, if you will. That's why they raise rates. Now, if inflation's really bad, so if prices are really, really high, by that logic, what is the Fed going to do? They're going to raise rates aggressively, but raising rates has an immediate negative effect on market activity. So if the public thinks that the market is going to, or if the public thinks the Fed is going to raise rates, it generally, the whole point is to discourage spending. What happens when spending is discouraged? Stock prices drop. And so with all that, right now, last Fed meeting, the last meeting where they did this, they raised rates 25 basis points. A lot of people thought they would pause. I told people they probably wouldn't pause. I told people they were going to raise rates 25 basis points, and that's exactly what they did. This next meeting coming up, and every 6 weeks they do the press conference. They announce the rate hike decision at 2, and then at 2:30 they do a press conference with Jerome Powell detailing why they chose to make that decision. Traders analyze his tone. They analyze his essentially sentiment. And they say it's hawkish if it's bearish, like if he's skeptical of the future markets, then they'll call it bearish, which just means he is wanting to contract. He wants a contracting market. a contracting economical growth, or economic growth, I should say. And if he wants to expand monetary policy, then they call it dovish. So dovish and hawkish. Dovish means expansive monetary policy. Hawkish means contractionary monetary policy. Now, every 6 weeks they do the press conference, and then weeks after that, so weeks after they make their rate hike decision, they drop what's called the FOMC Minutes report. Now, the FOMC Minute report gives a little bit more detail on why they chose to make the decision that they did in the last FOMC meeting. That's what's today. So today at 2 p.m. on the dot, we're going to get a report that comes out that details why the Fed chose to make the decision of 25 basis point rate hike that they did in early May. That's what this report shows. That's what this report is all about. It's not an actual press conference. It's more so just a report that is detailing, the reaction to why they chose to make the decisions that they did. And so the report is basically a Fed meeting reaction and deeper look that might give some foresight into what they will do in the next Fed meeting, which is going to be in early June. As well as like maybe we're going to hear Big Papa Jerome Powell's stance on what inflation looks like, what recession fears look like, all that good stuff. That's all going to be detailed, and we're going to provide cliff notes. We're going to go over the report. We're going to watch the market reaction all live right here. So that's what we're doing here today. Any gold news on FOMC? Well, gold is going to have a direct reaction to the market itself, as well as rate hikes. More rate hikes equals more valuable gold, but gold kind of follows the market lately as well. So it depends. Same thing with crypto. So we don't know how gold's going to react. We'll have to wait and see. Yeah, in about 26 and a half minutes right now. Yeah, I mean, like I said, I like Neil deGrasse Tyson, man. He's a little bit... when you're at his level, I guess you could be pompous. I support him. Let him do his thing. I'm not mad at him, But honestly, even if the Fed makes another 25 points, what does that matter? It doesn't depend on the few points. Well, I think prior to today, I thought that, there's a chance that the Fed might raise rates again, even though the majority of people think they're not. But I tend to go, like most of the time, it's all relative to expectations. But the rate hike decisions are usually what's expected. So if 90% of the analysts and banks think they're going to raise rates, they're probably going to raise rates. If 90% of people think they're going to pause, which I think is the scenario now, it might be like 70% of people think they're going to pause right now. 30% think they're going to raise rates. Then, it's a little bit more mixed, but it's still highly probable that they pause in this next one. Now, that data could always change. We don't really know. But yeah. And then after this, guys, remember, we got Nvidia earnings afterwards. So we've got just a lot of stuff happening today. A lot of stuff happening. Also, do me a favor, guys. Bump that like button if you haven't already, guys. Hit the notification bell. We appreciate it. Bump the like number. Hit the notification bell. We can look at Tesla. Tesla here on the left side. Tesla's down. So far still. I mean, you can look at the previous closing price. So you can see Tesla had a pretty rough day yesterday. It ended up ripping up towards like 193s. So very big level. And then it kind of slowly retraced all the way back to 180s now, but it's back up to 183s or so. So it's almost green in market hours, but it's still red on the day. You can see the previous closing price is way up here. So this is like the red to green level right here, this light blue line. And so we're still kind of far away from that. Market's starting to rebound after a pretty bearish opening session here. So here's the S&P 500, gap down a lot overnight, pretty bearish open. And it's finally starting to rebound here. We'll see what happens at the 200 EMA. It's not okay. So gold is going to react similar to the market activity, unless it has to do with banks, right? If banks go down, gold kind of goes up because of fear of banking struggles. Same thing with crypto to a certain extent, but gold, it's going to depend on what the market does, So like, it all depends on what happens. Like most of the time, the moves. So okay, it's hard to explain, but I'll do my best. All right, so whenever we get a specific decision for the Fed meeting, that's likely, right? So whatever's the most probable decision, if 25 basis points is the most probable decision, then it's not going to happen right when they announce the rate hike. It's going to happen in the weeks leading up to it, because generally the market, or generally the decision is going to be what's expected. So if we look at like the CME watch tool here, and we look at the Fed watch tool from the CME, this basically shows the probability of each decision here. Now, yesterday this was much higher. So today, a rate hike is looking more and more probable as time goes on. And we still have like 3 weeks until this happens here. So we still got like 2.5 weeks until the rate hike decision. And so this could change even more. But right now, the market is essentially getting baked into, either a pause, but I think this has gone up overnight. And so I think now the market is reacting negatively because of the debt ceiling woes. But it really depends. It's not as direct, so to speak. It's not as, you're not going to get as a direct reaction. The minutes report is in 23 minutes. But the market started bounce back. There's Tesla. Here's the S&P. I'm going to put the SPY up because the SPY is a little bit better judge of what the market's doing. And you can kind of see the SPY recently broke over the 200 EMA, over the volume weighted average price. I really don't know what gold's going to do. Gold is down a lot over the last few days. It's down today as well. If you look at gold's chart here on the left side, gold is down a lot. If we put up a 20-day chart, gold broke highs and got up to 2085, 2085 for the gold futures contract. And recently it basically gave all that back. It's down to 1960 right now, hit lows of 1954. And so this is the last 20 days. If you look at the 180-day chart, you can see gold has appreciated a ton in value over the last 6 months. Again, I think the banking fears that we've had has definitely benefited gold lately, but that could start to change. Gold could be considered extended now. And so I think anything is arguable. I don't really know what gold's going to do. Should I buy or sell the US 30? I have no idea what you guys should buy or not. I don't know. Nobody knows how this is going to respond. And the Fed minutes report is even less of a predictable reaction. All right. So we don't know what the Fed minutes report is going to cause in terms of reactions in the markets, both gold, silver, the S&P 500, the Q, crypto. We don't know how the market's going to respond to this. We really don't. We also have Nvidia earnings after this. So Nvidia earnings happen in a couple hours as well. And Nvidia is a pretty heavily weighted stock on the Q and on the S&P 500. And so that's going to move markets as well. And then tomorrow we have GDP and jobless claims numbers. And then Friday we've got core PCE, which is the Fed's preferred inflationary metric. So it's what the Fed uses to determine if they should raise rates. And so all that stuff drops in the next 3 days. And so whatever we're at now with the market, this all could wildly change. We get a run of bad data, the market could tank over the next 3 days. If we get a run of good data, obviously the market could bounce, but nobody knows. We're all speculating. The only people that really know are insiders, and you got a 50-50 chance of being right. So just be careful here, guys. Nobody knows. Yeah, I mean, gold is a pretty strong long-term asset. It's all inflationary hedges, right? So if you want to think about like why people buy gold or why people buy real estate, it's all inflationary hedges. All right. So like if you think about it like this, you're trying to keep up with inflation, which does go up long-term. And so how do you keep up with inflation? You can buy gold. In the last 20 years, gold has 4x'd in the last 20 years. The S&P 500 is about 3x. 3.5x. So gold is actually leading the S&P over the last 20 years in terms of like if you would have bought the equivalent amount of gold of the S&P, you would have made more on gold over the last 20 years. You can also buy real estate. Real estate is an inflationary hedge for a lot of different reasons, whether it's a mortgage or cash. A mortgage can be an inflationary hedge because, say you get a mortgage, right? Say you get a mortgage and it's a 30-year mortgage and you pay, $250K for your house, right? Even if it's in a mortgage and you say you're paying $1,000 a month, as time goes on and inflation gets higher, $1,000 a month is less significant overall relative to what you make, right? Because inflation is going to go up. So that $1,000 is going to be less significant of a payment as time goes on. And so real estate in that regard, and even getting a mortgage can be an inflationary hedge. Gold certainly is one. Real estate in general, your home should theoretically appreciate despite nuances of like, all this different stuff. And so it's all used to, the S&P 500 gives you 6 to 12% a year. That's an inflationary hedge as well. It's all used to keep up with inflation long term. And so that's kind of what you got to do. How do you prepare yourself for the FOMC minute? I usually get flat on big positions. All right, so SPY over the VWAP, over the 200 EMA. All right, so there's gold on the left here. Here's the SPY on the right. So SPY looking a little bit stronger. Still a pretty weak day for market activity in most blue chips, but not as weak as it was. I mean, it was down a lot. It's starting to bounce back, though. You know, it hit 409s, where the day before yesterday we were at like 420s. And so the market's been, you know, very volatile lately. Big moves up, big moves down. So y'all just be careful. You know, almost everything is red today. Tech, you know, everything. Yeah, for sure. What's the chances of market pump or dump? I don't know. Betting on that is just very risky. It's essentially a coin flip, so just be careful, man. And so again, just be careful. Like a lot of traders want to gamble away and take big positions ahead of this report. Nobody knows how the market's going to respond, and you got to have self-discipline. Even the big boys get flat ahead of this report. Now, it's one thing to react to this report, like to say, "Hey, these are the cliff notes. This is the sentiment. Let me take a trade now." After the report is released and ingested and digested, but it's a completely different thing to take a huge position now and then wait for the report to come out, basically gambling on what the report says. That's a completely different thing. I certainly think that is incredibly risky. It's essentially a coin flip. It's not a plus EV long-term decision in trading. And just be smart, guys. You know, I have no idea what's going to happen. My big thing here is like, I'm not an investment professional. I'm not liable if you lose, and none of that stuff. You know, like we're not slanging courses over here or anything like that. We're just kind of putting out free content. We drop this data quickly too. So we drop this stuff quickly as well, you know. So we get thousands of people tuning in for these big reports because we drop the data fast and we're consistent. We also have Nvidia today. A lot of economic data tomorrow. There is no live video. This isn't a press conference. This is a press conference reaction. So this is a reaction to the previous press conference and decision. Yeah, because there's no press conference, Golden. This is literally just a reaction to the last Fed meeting. Again, this is not a press conference. This is not a video. This is a reaction to the last Fed meeting. Well, this is basically a summary and maybe some foresight into what they'll do after this. Is what this is. Y'all can hear the music, correct? You should be able to. The big stuff moving the market today is the debt ceiling. But look at the SPY pump back up here. Gold is still down. Tesla rising up here. So look at Tesla fighting his way back. Tesla almost green on the day. I mean, it's still got a little ways, but Tesla's starting to get almost green on the day here. So starting to get some comeback and everything. We'll see if it continues. Well, the last meeting, the Fed raised rates 25 basis points. They said they could see us potentially having a mild recession. But they also said it's not a guarantee and that inflation signs have been getting better. That's what they said essentially during the last rate hike decision. I think Tesla has room to go lower today. I mean, it always has room. Will it go lower is a completely different story, though. All right, guys, we got about 15 minutes. 15 minutes. Again, hit the notification bell. We appreciate you guys. Again, SPY at 411s. Hey, good luck, Raphael. The 10-year yield is rising. Yeah, Tesla moving up. SPY starting to Let's see if the SPY holds the volume weighted average price here. So we'll see if the SPY holds the VWAP. Gold going up, dollar going down. The dollar has actually had a really strong day today, man. If you look at the Dixie here on the left side, the dollar has actually been very strong today. And I mean, it makes sense. Generally, the dollar has an inverse correlation with market activity. So normally, it's not a perfect correlation, but usually the market going up makes the dollar drop, and the market going down makes the dollar gain value because of inflationary fears. You know, if cash is gaining value, people stop, or people sit on it a little bit more, and they don't invest into the S&P or gold or you know, real estate or whatever. And as cash loses value, if the dollar index goes down and cash loses value, then generally people are going to take their cash and they're going to put it in more inflationary hedges. Which, you know, means that there's going to be an inverse correlation. If the dollar drops, people are going to take their money and put it in the S&P. So the S&P is going to go up as the dollar drops, and vice versa a lot of the time. And it's not exact, but it varies. Yeah, so there's the dollar index. It's at 103s. It's going up as the market has dropped a lot today. You can kind of see the market dropped as the dollar went up. Gold, on the other hand, is down today, but up recently. So gold dropped this morning at the opening bell. It also gapped down a lot, but started to rise a little bit. It's had a pretty rough few days, though. But I mean, prior to this, it was breaking highs. So I don't know what Bitcoin's going to do. Yeah, I really don't know what Bitcoin's going to do. I am going to throw it in subscribe only mode, team. So if you haven't already, hit the sub button, hit the notification bell. We appreciate it. Let's hopefully the market rebounds, but it doesn't matter. Not like I'm tied to one specific market direction here. Everybody announce yourself. Show us that you're subscribed. We appreciate it. Well, I always forget to press the like button. I appreciate your stream, so now I click the like. Hey, thank you, man. Plug power. So it's just a report. It's a reaction to the last press conference that they did. And so this is a PDF file, HTML file report. There's no video. It is a reaction to the last meeting. So the last meeting, this is a reaction to that meeting in a report in report format, in a HTML or PDF format is what it is. Hey, what's up, Nicole? Bro, I have no idea where you should buy gold, Yasir. I have absolutely no idea what you should do, what you should buy. Not an investment professional. I don't have a crystal ball. I'm certainly not selling a course or even claiming to be a good trader. I don't even know if you want to copy me, bro. So I get people all the time. Should I buy this? Where should I buy this? I have no freaking idea what y'all should do, man. Nobody does. Anybody that claims to is just kind of trying to, you know, sell you something most of the time. When you talk about the VWAP, does the time frame matter? Sometimes it can. It's not the VWAP AV, so the dynamic reactor is not the VWAP. It's actually a little bit better, I think, but you know, it's subjective. Based on past data for the Dow, price fell at New York Open, goes back to New York Open, and drops at the FOMC. Well, this isn't the actual FOMC meeting. This is the FOMC Minutes report. It's a reaction to the last Fed meeting. That's what this is. But yeah, gold is going up a little bit. You can see the SPY on the right. I'm going to put 3 charts up. I'm going to put gold, the S&P 500, and the dollar index. So here's the dollar on the right. The S&P's in the middle. And then gold is on the left. But instead of using the gold ETF, I'm going to use the gold futures contract here. So we can kind of see the reactions to everything. Here's gold. Here's the S&P. And then here's the dollar on the right. I said gold is an inflation hedge because it obviously is. I mean, all right, guys, we got about 9 minutes here. 9 minutes. Yeah, no worries. All right, guys. By the way, that was a perfect cue up for a Chart Prime commercial. Not right now. We'll do one afterwards, after this. We got a little bit of time, and we'll do one. 9 minutes for what? 9 minutes before the FOMC Minutes report goes live. I mean, not a little bit less than that, about 7.5 minutes now. Do you trade options? Sometimes. Sometimes. Not super often, but sometimes. It depends. I know everybody's been messing with those 0 DTE options. 0T. 0 time till expiration options. So 0 days to expiration. 0 DTE is what I've been trying to say. But yeah, those are risky. Y'all just be careful. Bro, Yasir, you've been asking for the same thing over and over and over again. I keep telling you, I have no idea what the gold's going to do. We're waiting for the report to come out so we can see with the reaction in gold. I have no idea what it's going to do prior to that, man. Again, it depends on what the report says, and we'll detail what the report says. But seller may go away, maybe. Airlines, I don't know, man. We'll see. Lil John and the Eastside Boys. Yeah, I have no magic ball. That's right. Better to enter 3 to 5 minutes after the report. Yeah, again, a reaction to this is understandable, right? So a reaction to this is completely understandable. Like here is the FOMC calendar, right? So this is where the report goes live. You can see the last meeting minutes report from March is right here. So like you can kind of see where the report's going to be. So it goes live at 2 p.m. Here's the last one that was released April 12th right there. The next one is going to go live right here at 2 p.m. on the dot. If you click on the last one, you can see all this is an HTML file that goes live. It's long, and we'll detail it, read it, watch the market reaction, give you cliff notes from it when the next one comes out, as well as if you want to find this yourself, just look in the description. It should be there. Yeah, we try, Ruben. What would be a good support for the SPY if the market reacts bad? Oof, I don't know. 400, 405s, 410s. I like psychological levels, but I have no idea what it's going to do. It might just kind of blow past those for all I know. Hey, good luck, Milo. Yeah, good luck, Milo. I'm certainly not recommending you do that. I have no idea what anything does, what gold does, especially. Not an investment professional, not liable if you lose. Always make your own assessment, trade responsibly. I might have no idea what I'm doing, be wildly wrong about anything I say. Don't copy me. Definitely top 3 most wrong traders in the world right now. Yeah, it's always better. Like I said, a lot of people gamble on this report. Like they take huge positions ahead of it and then try to just kind of gamble away. I'm certainly not recommending that. I'm going to wait, watch the report, react, and then maybe take a trade. We're also going to have Nvidia earnings coming out after the Fed minutes report. So Nvidia earnings are going to go live right at 4 p.m. on the dot. So, there's that. And yeah, we'll see. No idea what copper's going to do. All right, guys, we got 4 minutes. 4 minutes. We got about 1,200 people here. So, again, y'all subscribe. Yeah, again, remember, taking big gambles ahead of this report is usually just a coin flip at best. I come from like a poker background, right? So taking big positions here is just it's not a plus EV long-term play. Like it's not plus value long-term. Like you're not going to have value gambling away. You might get lucky, but it's not going to be consistent. And it's just a risk that I'm not willing to take. Like I'm not a gambler. I don't look for the rush of trading. Like I would rather just sit back, wait, and then maybe react if we get a good trend that starts from the report, from the cliff notes, all that good stuff. So y'all stick around. Again, we got 3.5 minutes. What if it's a nothing burger? Well, just stick around. Any idea what cattle will do after the report? My guess is they'll eat some grass, is my guess, but not 100% sure, you know. Do you secretly gamble, though, sometimes? I mean, I'll take some dumb trades every now and then, but I try not to. All we can do is try. We're all human. We're all going to make those dumb decisions sometimes. But not from these reports. Like, I'm not buying up anything big ahead of these reports ever. It's just not worth it most of the time. Yeah, no worries, Joe. Appreciate the love. Hey, thank you, IC. Good perspective, John. I agree with you. Yeah, I'll read some of it, but again, we're not going to be able to read it fast enough. The algorithms are going to pick it up and move. And so I'm not going to be able to read this thing quick enough to really make any difference. What I'll do, though, is I'll cover the cliff notes. You know, I've got a lot of different sources that put out cliff notes of the report. And again, the algorithms are going to eat this up. And so, yeah, we'll see. What I might do, I got another idea that I might do too here. Has to do with AI. So what I will do is give you quick cliff notes into this. All right, guys, we got about 2 minutes. Again, hit the subscribe button if you haven't yet. We cover all the big market data. Again, today we're covering Nvidia earnings. We're covering Nvidia earnings today. Be ready. Minute and a half left. Again, hit the live button next to the play button as well. Downward pressure. What's up, Shah? Yeah, y'all hit that like button. We got about 1,600 people here. We still got about a minute left. No, I'm mostly a better swing trader than I am a day trader, Lewis. And so I do a little bit of everything. My big edge, in my opinion, is, and again, I can't guarantee any results, profit, or anything. But my big edge, I think, is swing trading and investing. It's my favorite. I mean, I day trade every day. We day trade these moves. We'll probably day trade this, but it's diversified. Like, I do a lot of different stuff. I don't stick to just one, you know. I've been trading for years and years, you know. I've run this stream for 6 years now. You know what I mean? So we do a lot, but definitely top 3 greatest ever. Definitely top 3 worst ever picks in the world for sure. But yeah, market's starting to move up ahead of this, but again, SPY is right over that VWAP level. We got about 20 seconds here, guys. 20 seconds. There's no meeting. There's no meeting here, guys. We're getting ready to look at the report here. There's no meeting. I'm going to give you the cliff notes of this one, though. All right, here's the report. Goes live right now. Again, make sure you hit the live button next to the play button. All right, so there's the report live here. So far, gold has dropped. The market hasn't really reacted much, but gold has dropped from this report. Give it time to digest. The market's starting to move up some. We're waiting for the report to show up, which it hasn't even showed up yet on the Fed Reserve website. So bear with me, guys. Market has initially popped up a little bit here. A little bit. Waiting the report to go live. Bear with me here, team. So far, you can see the market reaction here. It's gone up a little bit. So really, again, we're going to show you the report in a second and send you the link to the report as well as give you some cliff notes. So there's the minutes report. Give me 1 second, guys. Let's look at this. Copy and paste is my friend. Bear with me. All right, market's moving up. So far, responding positively to this. All right, so bear with me. All right, guys. So again, looking at the cliff notes to this right now. Looking at the cliff notes here. Looking at the cliff notes of this so far, officials discussed essential need to raise the debt limit to avoid financial economic shocks. Officials were divided over the path of rates, with more favoring a pause. Officials saw uncertainty over the further rate increases at the May meeting. All right, so that is the first cliff note that we have for this report. I'll give you guys the links right here if you want to find the full report here, guys. So I'll give you guys the links. Bear with me. All right, bear with me. And so it says market participants broadly expected a 25 basis point rate hike at the May meeting and saw the resulting rate hike as likely to peak for the current tightening cycle. Survey respondents assigned a much higher probability to the peak federal funds rate being between 5 and 5.25% than they did in March. However, respondents still assigned a substantial probability that the peak may turn out to be above 5.25%. So that is the first part. We have more cliff notes here. All right, so financial market conditions, investor sentiment around the banking system stabilized, leading to less volatility in asset prices. Nominal treasury yields decreased, equities appreciated, credit spreads tightened, and the trade-weighted value of the dollar depreciated. Implied volatility measures declined across markets. However, policy-sensitive rates fluctuated in response to economic data, market perceptions of risk, and liquidity conditions. Treasury market liquidity, and while the treasury market liquidity improved somewhat, it has still faced challenges. Despite lower than normal liquidity, treasury cash and futures market continued to operate smoothly here. And you can see the market kind of turned down. It's starting to react negatively to this. First, FRC's bank closure and acquisition. The closure and acquisition of FRC were orderly, although investors' attention remained on stresses in the banking sector. Yeah, basically, banks struggled. The U.S. Treasury and debt limit. The Treasury announced the possibility of not fully meeting the Fed's obligations by June 1st if the debt limit was not raised or suspended. However, the actual date of this event was expected to occur several weeks later. Yields on Treasury bills and coupon securities maturing in the first half of June increased significantly with high volatility. And you can kind of see the market starting to turn on this. We got more cliff notes here that I'll post in chat. So the Fed's Waller said he does not like that we have mortgage-backed securities on the Fed's balance sheet. However, at some point we can run these off. They are a good yield curve inversion, and that may be what we have now. And so we're going to put some of this in the chat. Shows officials are split on support for more hikes. So like whether they'll raise hikes in the future, officials are split. Participants generally agreed. Extent to which further interest rate hikes may be appropriate have become less certain. Many focused on the need to retain optionality after the Fed meeting. And so, again, you can kind of see the market reacting negatively here. And again, we're putting these cliff notes up in chat. Investor outlook. So deposit outflows from banks at the earlier May meeting. Outflows from small and mid-sized banks ceased in late March and April. And while equity prices for regional banks declined further, it was primarily due to the expectations of lower probability rather than solvency concerns. The market participants remained cautious about potential bank stresses. So everybody's still kind of worried about banks. Surveys of primary dealers and market participants indicated little change to investors' macroeconomic outlook compared to March. Although there was ongoing focus on the implications of credit tightening, respondents perceived upside inflation risk to be lower than in March. So basically, inflation worries have gone down some, and I think that's making the market pop a little bit. So market participants broadly anticipated 25 increase and viewed it as likely the peak. Yeah. And again, that's the cliff notes that ChatGPT gave me. And again, so far the market's split. You know, gold dropped initially and then bounced up a little bit. The SPY went up a little bit and then dropped, and now it's bouncing back up some here. If you want to see the link to the actual report, I'll put it out right here. Here's the actual report link. We'll also put the link in the description if you want to catch it in the chat. All right, so again, markets bouncing up a little bit. We're still kind of digesting this data here, guys, so bear with me. But we did put it up in chat. So it should be in the description as FOMC Minutes report. Again, bear with me. We're still digesting this data. I'm kind of using Chat GPT to give me cliff notes. So it does say market sentiment improved over the intervening period. So in the 6 weeks leading up to May, early May, market sentiment improved. Concerns about a sharp near-term deceleration in economic activity appearing to recede as stress in the banking sector declines. So basically, banks settled. The path for the Fed funds rate in 23 increased modestly over the period. Broad equity prices indexes increased, although equity prices of some regional banks were lower and equity market volatility declined. So yeah, I noticed a big steep decline in market activity for my live streams. Financing conditions continue to be restrictive and borrowing costs remain elevated. Let me see if I can find another. So here is... All right, so here is effective May 4th, the FOMC committee directs the desks to, number one, undertake open market operations as necessary to remain the Fed funds rate in the target range of 5 to 5.25, conduct standing overnight purchase agreement operations with a minimum bid of 5.25. So basically, they're going with 25 basis point rate hike. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming info. The committee would be prepared to adjust the stance of policy as appropriate if risks emerge that could impede the attainment of the committee's goals. And so basically what they're saying is that if things change, they're not going to pause. They're going to raise rates again. So that's essentially what they're saying. And I think if we look at the CME watch tool, like the Fed watch tool, we can kind of see that, you know, yesterday the probability of a rate hike next FOMC meeting, which is going to be June 14th, was about, I think it was like 70 or 8, it was like, I think it might have been 90%. Now it's down to like 65%. And so I think more people are pricing in with the latest market activity another rate hike. Now it's still more probable that we're going to pause, at least by all the economic projections. But again, we have no idea what's going to happen. Of course, nobody does here. And, you know, we can only bet. But yeah, if we look at this, for instance, right now, okay, so it actually went up a little bit. So a pause is actually higher at 71.6% compared to where it was. This was just now at 68%. And so it looks like the broad interpretation of this meeting is showing that more people think that we're going to do a pause on June 14th. So 71.6% of people think that we're going to pause. Only about 28.4% think we're going to raise rates again. I think banking plays a lot into this. You know, if we look at PACW, banks have been very strong over the past couple of days. And if banks are strong, there's less worry about rate hikes. And if banks are weak, then they're more likely to pause. And so I think that's a dynamic to pay attention to now. But again, it still looks like most people are expecting rate hike decisions here. What's Bitcoin doing? So yeah, dollar index hasn't really moved much. Bitcoin is down a lot from this report, or no, from this morning, I guess. So Bitcoin hasn't really moved much from this report, but we are seeing some breakdowns here. The market's looking weak. And so again, we will maybe trade a little bit now. We'll see. But the market's starting to look weak. And if you haven't already, guys, and you want to trade some of this economic volatility, try out Top Step. So on Top Step, you can trade the SPY. So you see the middle thing that we're using to watch this data. You can also see banking. What we're doing on Top Step is we are day trading the S&P 500. You can also day trade gold. You could day trade silver. You can day trade currencies in the futures market. And there's no PDT rule. So you don't have to have 25K and all that stuff to day trade. You can day trade all that stuff with no PDT restrictions. And Top Step is a funded account program. So where they give you a demo, and if you can hit the target on their demo while following their rules, they fund you between 50,000 all the way up to 150K with a 90% split. And so it's kind of the best of both worlds. They give you a 50K demo for the base one. It's like right now there's a 30% off sale. They got rid of the daily max loss. So you'll still get timed out if you hit the daily max loss, but it doesn't eliminate you from the combine. And so that's great news. And with that, it's 30% off right now. It's really a great situation where it's like most people are going to lose these because most day traders lose, but it's a lot cheaper to lose this than put up the money yourself. And so it's a much cheaper way. If you're good enough, you can still get funded. They're the most legit funded program in the world. They've been around for over 10 years. They pay out millions, fund thousands a year. They are a sponsor of mine, and so I'm certainly biased in their favor. But if you want to check it out, there is the link in chat. Yeah, we'll see what happens here, guys. And we're up a nice amount in futures today. So we did just take a position that we made money on, shorting the S&P 500. You can see this is my P&L on the day. We've got about 11 to 1 reward to risk ratio. We are up about $600. About $600. We got about 11 to 1 win to loss ratio, not reward to risk, about 11 to 1 risk to reward. And again, what I did just now is I took 2 contracts and I shorted once we broke under this 200 EMA, projecting that we were going to reject there, and we did. So I'll take it. Yeah, link is in the description. You also have the link right there. Yeah, the market's not really reacting too much. It is dropping down some. So the market is overwhelmingly sideways from this report, but we still got a lot of time to see what happens here, to be honest. And again, I'll review the Cliff Notes. The report highlights the following key points regarding development in markets operations. And again, we use ChatGPT to figure this out. All right, so here's ChatGPT. All right. We asked it to give us the Cliff Notes, and it said, 1, financial market conditions, investor sentiment around the banking system stabilized, leading to less volatility. So yeah, let me exit out of some of this old stuff that you guys can't see. Hold on, and I'll show you the Cliff Notes that ChatGPT gave me real quick. All right, so here's the Cliff Notes that ChatGPT gave me. All right. Investor sentiment around the banking system stabilized, leading to less volatility in asset prices. Treasury yields decreased, equities appreciated, credit spreads tightened, and the trade-weighted value of the dollar depreciated. Implied volatility measures declined across markets. However, policy-sensitive rates fluctuated in response to echo data, market perception of risk, and liquidity conditions. What's that, bro?
Remember the competition?
Yeah, the piano competition. You don't even know how to play piano, bro.
I was on GarageBand.
Oh, you were a GarageBand. Oh, congrats, man. That's great, dude.
But I got third, though.
Oh, that's great, man. I'm proud of you. Congrats, buddy. Love you, man. Congrats, dude.
Do I get like a reward for this?
We'll talk about it. I'm working right now, but we'll talk
Can
about
I
it.
play games?
Yeah.
Okay.
All right, buddy.
Do I have to go to school tomorrow?
That's up to your mom. All right, we'll talk about it. I love you, buddy. Good job, man. Proud of you, dude. Hey, close that door. Yeah. Anyways, close that door for me, buddy. Thank you, man. All right. So anyways, however, policy-sensitive rates fluctuated in response to economic data, market perception of risk, and liquidity conditions. Treasury market liquidity, and this is relevant to the stuff going on. The Treasury market liquidity improved somewhat. It still faced challenges. Despite lower than normal liquidity, Treasury cash and futures market continued to operate smoothly. FRC closure and acquisition were orderly, although investor attention remained to the stresses in the banking sector. The U.S. Treasury Department announced the possibility of not fully meeting the Fed's obligations by June 1st if the debt limit was not raised or suspended. The actual date of this, though, was expected to occur several weeks later. Yields on Treasury bills and coupon securities maturing in the first half of June increased significantly with high volatility. All right. Outflows from small and mid-sized banks ceased in late March and April, while equity prices for regional banks declined even more. It was primarily due to expectations of lower probability rather than solvency. Surveys of primary dealers in market, little change to investor sentiment, basically. Market participants are mostly anticipated a 25 rate hike in May. Now they're basically saying that they're unknown on what we're going to do moving forward. So that is basically the cliff notes of this Fed meeting. Yeah, so Jack has been learning how to create music on the computer. That's why I said he doesn't know how to play piano, but apparently he won an award at a school for like some music that he created on his computer. And so that's great, man. He's got his award here. He's got his award. I'm proud of him. That's great. Yeah, so anyways. Gold's moving down right now. It's bouncing up a little bit, but it's down on the day for sure. What is your real estate podcast name? We don't have a real estate podcast. Yeah, market sideways. Yeah, I mean, again, Top Step's a sponsor of mine, so I'm certainly biased in their favor. I'm always transparent and pretty honest about that, so it's all good. Yeah, gold is up a little bit short term, but it's down on the day. You can look at it right there. That's gold's chart right there. How did you get ChatGPT to analyze the Fed minutes? I copy and pasted it and said, yo, give me the cliff notes of this report. And it spit that out. Do I like Palantir? I mean, I don't really know much about Palantir. I know it's been on a huge run lately. Yeah, Bed Bath & Beyond's big rally. I mean, it's cool and all, but it's still only up to about 27 cents, you know. And for a stock that was at, you know. Yeah, for a stock that was at, you know, $45 in 2021. It's a pretty rough decline for it. Well, I didn't ask it for that, Christian. Number one, you can use Bing for that. What you're asking me. Like, watch. I'll get another. Asking the Chat GPT on Bing to give me cliff notes of the recent FOMC Minutes report that went live today. All right, so the minutes are a detailed record of the committee's policy settings. The Fed minutes officials are less confident on the need for more rate hikes. The minutes from May 2 to 3 policy meetings showed that some officials saw slowing economic growth and inflation pressures as reasons to hold off on future rate hikes. All right, so basically, yeah, ChatGPT gave me even better explanation of it. Again, we just pasted all that in chat. I mean, the way I did it originally to get it that fast is I copy and pasted half of it into ChatGPT, and I put in the front of it, ChatGPT, give me the cliff notes of this report. I didn't specify what it was. I just said, hey, give me the cliff notes, and it did. But yeah, the markets are down from it. Gold's up a little bit short term. But yeah, gold is up from the report overall. You know, the report went live. There's a 5-minute chart. So let's put a 1-minute chart up. So yeah, the report went live here. And it's up a little bit, but the market's down some short term now. We're going to stream the whole Nvidia earnings call and all that stuff live when it happens. Does the dollar become stronger or weaker? What's your opinion? Well, it depends on what the market does. The dollar usually becomes weaker as the market goes up and vice versa here. So there's usually an inverse correlation between the dollar index and the market in general, as well as crypto. Where like there's an inverse correlation between crypto and the dollar index. And so it varies. Yeah, we trade futures. So yeah, we'll see what happens here. But market started to break down here. We did short the market. And so we had a lot of people talking about gold. And so I want to show people Chart Prime. This is a company called Chart Prime. It's custom trading view indicators and services and signals, right? So they give you like reversal signals. They give you they show you where candlestick patterns are and all that stuff. My favorite way to use it, and again, it's like 35 bucks a month, so it's very cheap, and you can use it in stocks, crypto, forex, futures, all that stuff. And so it's not like restrictive to just one symbol or anything like that. You can use it in all of them. This is today's gold reversal alerts using Chart Prime. And again, I can't guarantee you're going to make money. They're a sponsor of mine, so I'm biased in their favor, but just take a look at this. Like, I can't fake this either. I can't guarantee you're going to make money. They pay me money, so I'm biased in their favor, but like, look at this. The real edge, in my opinion, is when multiple show up together at once. So like, here's three different, it's showing me two bearish engulfing candles and a reversal down signal. Look at the drops you get over like 30-minute period. And then here's the next one. There's three different signals showing up here as well. Two candlestick patterns and the reversal up signal. Nice bounce all the way up to here, which again, here's two signals showing up together. Nice drop. This one was probably wrong, although you did get a little bounce there. And then again, three signals showing up together here. What do you get? You get a nice bounce over like 30 minutes. And I can't fake that. I mean, this is literally gold today. We had a lot of people talking about gold, so I went to the gold chart. Chart Prime, it's 35 bucks a month if you use my link. 35 bucks a month. Can be powerful, very useful. And so again, I'll post this link. Great way to help support my channel here. I can't guarantee you're going to make money, but pretty cool. And it's just kind of custom indicators. Their dynamic reactor indicator is pretty cool too. So it's just kind of custom indicators. It's like custom VWAP and stuff like that. And so again, if you want to check out Chart Prime, again, link is in the description. They're a sponsor of mine, but pretty cool. Yeah, so I think what they're saying now is like, we don't know what they're going to do in June. Like, we really don't know what they're going to do in June. We don't know if they're going to raise rates. We don't know if they're going to lower rates. We don't know. We truly don't know what they're going to do here. And so again, we'll see. But y'all be safe. All right, so again, SPY's moving up, but we are really in a choppy range here. Again, we are going to stream Nvidia earnings, so stick around. We will stream the full Nvidia earnings report and call today. And we also have other earnings dropping this evening too. So we got Nvidia Snowflake, which is a software company, American Eagle, Guess. Man, it's been so long since I've seen anybody at American Eagle or worn American Eagle even. Not hating on it. I used to wear it, bro. I used to rock American Eagle all the time. You know, Abercrombie and Fitch too. I grew up in the early 2000s, you know, in the 90s and early 2000s. Anybody that grew up then, y'all know you go into Abercrombie and Fitch, it smells like straight cologne. They got techno music going, you know. Everybody knows. Hollister too. You know what I mean? Early 2000s were funny, man. Anybody see the documentary about Abercrombie on Netflix? It's hilarious. You know, it's hilarious. Anyways, SPY, pull it back a little bit. We'll see if it bounces. Bitcoin down there too. Yeah. Gold rejecting. Yeah, we'll see. Yeah, again, you look at the Fed watch tool here, guys. Like, you look at what they're expecting here. Again, it looks like most people are expecting a pause in rate hikes for June. And I don't know. What this means, though, is that if we don't pause, the market's going to really react negatively, I think. And so if we don't pause, the market's going to react super negatively. Yeah, but Palantir has been on a run, man. Look at Palantir. So there's Bitcoin, not really reacting to this. Palantir's been on a run. Here's a 20-day chart. Look at Palantir, man. This thing's up like, you know, a little bit less than 100% over the last 10, 15 days for Palantir. Yeah, I don't know. Do y'all think, I guess the big question here, so now that we have all these votes, we got like 3,200 votes. Let's do another poll. Does the Fed raise rates in June? Yes or no? A good question. Does the Fed raise rates in June? Let me know what you guys think. Bitcoin's not moving a ton right now. Here's BTC. So it's moving. It's down. It's moving down. Can you check copper? What's the copper symbol for futures? Let me see. Okay, it is HG. All right, sure. So here's copper. Copper's been pretty flat all day. It had a pretty big drop this morning with everything else, but you know, when the report came out right here, you know, the report came out right here, and it didn't do much at all. Market's still breaking down though. Buy gold. What do you think about gold? I have some. I bought a little bit of gold as a hedge, but I really don't know what it's going to do. I'm just kind of gold long term is pretty safe asset to invest in. So it just depends on, you know, your time frame. Yeah, I did hear that, Cap. Yeah, no worries, Robbie. Yeah, gold just rejected the 200 EMA, which is right around 1966. So time will tell. We'll see. All right, so again, SPY down to 410s here, guys. So the SPY down to 410s. And then again, guys, remember we got Nvidia numbers coming out too. Summertime's kind of slumping the market a little bit, but I sounded like Kodak. But sorry, I usually don't play music here. Let me put instrumentals on. It should be instrumentals. What's your take on Amazon 119 calls for next week? Let me take a look, man. I'll take a look. Again, I'm going to preface it with I have no idea what it's going to do. I might be wildly wrong about anything and everything I say. Not an investment professional. Don't sue me, sir. I have no idea what I'm talking about. I might be wildly wrong. Amazon 119 calls for next week. What day next week? I think it's possible, but I also think like you could argue that Amazon is a little extended here. Heading into this. Now Amazon hasn't really hit 119s though. So that would be like the highs of the last. That's basically betting that Amazon's going to hit the highs of the last like 5 months, 6 months, 7 months. So that's, I mean, it's close to it. And so it's not like super bad, but you know, there's risks. There's risks because again, we're still pretty far away from that. It ultimately depends on what happens for Nvidia earnings, because I think the boost for Nvidia earnings, if Nvidia earnings come in hot, come in good, that'll boost tech up, including Amazon. And so if that happens, you might be good. So again, it's one of those trades where I really don't know. Good luck. I hope you make money, man. I really do. I just genuinely don't know about that one. It depends on if the market bounces back from this weakness. And we got a lot of economic stuff coming out over the next 3 days that's going to influence whether it does or not. And so, good luck. I hope you make money. Yeah, we made some money shorting this here, but we still got time though. Like we made some money shorting it. I'm trying to be patient and just kind of wait this out and like hopefully get some good stuff. But again, time takes. The time to see how the market's really going to react to this. Again, the more important stuff than the Fed minutes report, again, is going to be GDP data tomorrow. So tomorrow we have GDP data. We have jobless claims data. So like a form of unemployment and GDP data drop tomorrow. Now, GDP is much more significant than jobless claims, but I think this will move markets more than we're getting right now from the FOMC minutes. So like if we look at this report here, so tomorrow the expected number for this is going to be GDP is expected to show up at 1.1%. And it's revising data. It's revising data, right? So 1.1% is still what they're expecting. We'll see if it changes. So it's kind of prelim GDP. And again, we'll see what happens. Very, very interesting to see what happens here. We also have jobless claims numbers coming out tomorrow, 250,000. So again, higher jobless claims numbers means like lower employment, like more high, is the equivalent of like higher unemployment. So jobless claims is kind of like higher unemployment if it comes in high. And then we also have pending home sales tomorrow at 10. We have the core PCE deflator. If you don't know what PCE is, again, PCE is the Fed's preferred inflationary gauge. And so it's actually what the Fed uses to determine how bad inflation is. So again, if inflation comes in really hot, if PCE comes in really high, that's bad for market activity. That's going to make the market drop. That might influence what the Fed does in the next rate hike decision and all that stuff. So again, we got a lot of stuff that could influence the Fed's decision in June coming out in the next 3 days. And then again, today in about 20 minutes, we're going to pivot on over to our Nvidia stream. And we are going to be streaming Nvidia earnings live. We're going to cover the market's response. They drop at 4 p.m. We're going to stream the whole thing. Then we're also going to stream the accompanying press conference an earnings call that happens. So we'll stream all of it live. So again, subscribe if you haven't yet, team. We appreciate it. Nvidia earnings call is going to be live. 5 o'clock market time. So it's going to be a busy day. And then we also got a crypto stream coming on after that. Hey, what's up, Sam? I mean, I'm not an expert, Arvin. I'm not claiming to be an expert or anything. What's the difference between a gambler and an investor? Well, it depends on what your definition of gambling is. If your definition of gambling is risking money, I mean, then we're all gambling. Life is a gamble, if you will. But if your definition of gambling is risking money with unfavorable odds, that's not what investing is. In fact, the biggest long-term edge, the biggest edge you have in all trading markets, in all types of trading, on any trading style, including any trading style, the biggest edge you'll ever get is long-term value investing. Warren Buffett's value investing, essentially buying up blue chip stocks or the S&P 500, buying up blue chips, diversifying into them, and just kind of sitting for 5 to 10 years is the single most effective trading style ever, investing in the world right now, without question. And so it depends. That's certainly not gambling because long-term edge is there without question, and value investing specifically. Now, the shorter term trading you get, the riskier it is, but you can get good or bad at it. It just depends on what you're doing. What do you think about gold this week? I mean, gold's starting to move up a little bit here. Market's moving down, but gold has actually reacted better than the market is. You can see the gold futures contract is right there. So what's Tesla doing? Tesla going up. Right, exactly, Kyle. And again, I think that's what a lot of people miss out on, man, with the, I know a lot of people preach like doom and gloom, like the market's going to crash and like all this stuff, right? Like I think a lot of people preach that. But again, I think you got to understand like the real, even with the drops that we've had over the last couple of days, right? If you look at the SPY here, again, the S&P 500 give you on average 6 to 12% a year, right? Here's the last 180 days. Market's pretty strong over the last 180 days. The S&P 500 will give you on average 6 to 12% a year. And that includes crashes. And we talked about this over and over again, and I'll keep saying it so people in the back can hear me. All right. Biggest edge is the S&P 500. And I'll explain why. All right. Is that 6 to 12% a year on average is what it'll give you statistically, over a long period of time. But that includes crashes. And so what does that mean? That means that on a normal year where the market doesn't crash, it's going to give you much more than 6 to 12%. It's going to give you 20% or more on a good year. So a lot of people, they get caught up in this political game of like doom and gloom, like the market's going to crash. They've been telling me this for years. I've been streaming every day for years. I've been seeing the same people come in saying the same thing. And again, to a certain extent, they can be right sometimes. I'm not saying the market's never going to crash, but what I'm saying is that the market's already down a lot, but if you look at the last, month, market's been pumping up. If you look at the past 6 months here, here's the last 6 months. 6 months ago, 8 months ago, the market was at 340. It's at 410s right now. So even with this big correctional drop that we've had, market's still looking pretty strong. Still looks like it's in an upward trend. Now, if we start falling more and more, I think if we break under 400, that's a bad sign. But we're not going to go down forever. And so, this is certainly not a crash yet. If we started to break under 380, I'll get worried about it. But time will tell. What do you think of doing long-term in NASDAQ 100 and the S&P? I think it's virtually the same. I think whether you put your money in the Dow or the NASDAQ or the S&P 500 or the SPY or the Q or whatever it is, I think they're essentially the same. Now, some have pros and cons. Some are better or worse in any given market. But for the most part, like again, here's the S&P. Here's a weekly chart on the S&P. Where you see the real long-term edge, which is just long-term strength. Here's the same thing on the Dow, right? Looks virtually identical. Where's Mike Goldberg at? There's the Dow Jones. You look at the Q, virtually the same thing. You look at the SPY, virtually the same thing. You look at the S&P, virtually the same thing. You look at whatever you want to look at. You look at Apple, virtually the same thing. And so, that's the real long-term edge. All right, market's starting to pull back a little bit. Amazon's still moving up, though. SPY's still bouncing back a little bit now. So far, choppy action here. I mean, I was day trading the SPY. Or I was day trading what's called the E-mini futures contract. So you could day trade this stuff in futures. You can kind of see I'm up in the combine on Top Step about 600 today. So we're doing pretty well, but what's really nice is that, again, what I try to do on these funded account programs is simple. I try to build up a cushion and then swing into that cushion. And so you can kind of see that. My drawdown today is $90, meaning the most I was ever down today was $90. And you can kind of see, like, I'm up 600, but the most I was ever down was 900, or was 90, basically. How do I do that? Is I build up a cushion first. I make profit first. If I don't build up a cushion, I don't trade large, right? So I build up a cushion. So say I build up a cushion of $90, $100, $200, right? Then once I have a cushion on the day, then I scale up my size a little bit more. And that way, if I lose in that situation, I'm down $90 instead of being down 500 or whatever it is, right? And that way, you're only really taking big risk when you're up on the day and you have a cushion. And if you don't build a cushion, if you're not up big on the day, then you probably shouldn't be trading large anyway, because the trading market's not favorable for you at that point in time. That's what I try to do. And again, my TOS account, so this account here has got about 50,000 in it right now, give or take. More, it's got a couple 100,000 in buying power. So that's what we try to do on both of those. Well, next is not the crypto show. Next is Nvidia, and we're going to go ahead and schedule that now too. We'll probably try to yeah, what do you guys think about Nvidia earnings here? Sorry, I'm scheduling this stream now. SPY's still moving up. Look at Amazon pop here. Gold is still down on the day. Dip, are you guys buying anything? Let me see. All right, so we asked people, does the Fed raise rates in June? We got about 700 votes. 65% say yes. 35% say no. I mean, that's actually, I don't know what we do in June, but probability-wise, right now, the CME, which is a very big company, or very accurate data, has the chances of a rate hike at about 28%. So. Positive. Yeah, I guess the real question is, do we raise rates? Do they? Next FOMC is June 14th. Crypto YouTuber said it was 35%. I mean, it varies. It depends on what tool they're using. It was 35% earlier. Now, after this Fed Minutes report, you can kind of see right now. It might have gone up. Yeah, so right now it's about 28%. Yeah, market didn't react much. It's beginner trading at Gmail. Yeah, so it's gonna change. It's not like it's like only, it's not like it's stationary. It moves. All right, market's flushing down. Gold's still pumping up a little bit though, so gold is still moving up some here. Yeah, gold is still moving up a little bit. So yeah, this is Nvidia Q1 earnings here too. So this is Q1 earnings for Nvidia. All right, guys. So yeah, let me get this ready. All right, guys. So again, market's starting to run back up a little bit here. SPY up to 411s basically right now. 411s. Oh man, thank you for all the subs today, man. We grew by, listen, we need 10 more subscribes to break 108,000 subscribers here. 10 more. Just 10 little baby subs, guys. You know you want to. Try it one time. It might feel good. Everybody's doing it. We're going to go back to the peer pressure here. Everybody's doing it. Try it one time. Might feel good. Hit the subscribe button. Again, the SPY's up to 411s right now, guys. 411s. All right, guys. Again, let me know what you guys think Nvidia is going to do for their earnings report. No reaction at all? No. No, never seen him. Yeah, I don't know what gold's going to do. So the reaction is already out. Can you tell me where I can find the best source to learn fundamentals? YouTube's your friend. There's a lot of good free sources. I would just be careful. What I try to always tell people, hey, thank you guys. Shout out to you guys. What I always try to tell people is this, okay? Is like, if you get started in the market, a lot of the time, like, there's just a lot of people trying to sell you a lot of different stuff. Hey, shout out to you guys. We broke 108,000 subscribers. Thank you guys so much. I appreciate it. Again, so basically what I always try to tell new traders is this, is that understand, what I always try to tell people is that you're going to have a bunch of people trying to sell you courses. You don't need to buy a course. All the stuff's available for free out there. You don't need to sell a course. You don't need to sell a service. You don't need to, like, I don't sell any of that stuff. I have sponsors, and so I plug affiliate links sometimes, but like, I don't sell a course because almost everything you need to learn fundamentally about the stock market is available for free on the internet. Now, I'm not saying all courses are bad. If you could find one for a couple $100, as long as you're not paying like $3,000 or $4,000 for some type of mentorship, it's usually not worth it. Again, and usually they're telling you very publicly available stuff, like stuff that you can find on Google. And you know, confirmation bias is strong. So like, of course, anybody that's bought those courses before, they're going to tell you, bro, this is the greatest course ever. It's the greatest course ever. Why? It's because they spent $4,000 on it. You know, I'm not going to buy a car. You know, say I buy a brand new car. Oh, it's the greatest car ever. Do you like the car? Oh, it's the greatest car ever. You know, confirmation bias is strong. Do not spend thousands on a course. You don't need to. You just don't need to. All right. And so remember, everything's available for free. And just trade small. The other advice I have for new traders is trade small. You don't need to spend, you know, all this equity trading. Like, learn how to trade first, and then you can scale up your size. Use a funded account program. If you want to check out Top Step, link is in the description for that. But again, I am biased in their favor because they're a sponsor of mine, and I always try to be honest about that. But yeah, just trade small. Don't buy a course. Learn for free. Best advice I can give. We're gonna get ready to do Nvidia earnings coming soon, guys. So we're gonna pivot on over to our Nvidia stream. Again, you won't have to go anywhere. As soon as we end this stream, it's gonna bring you to the Nvidia stream. And so as soon as we close down this stream, it's going to bring you to the Nvidia stream. If it doesn't, for whatever reason, I'll give you the link. Here's the link to the Nvidia stream. We're about to start right meow. And I'll post this link up in chat. So there's the link for the Nvidia stream. It's right there. Again, as soon as we close this, it's going to bring you to the Nvidia stream, and then we'll stick around. We've still got some time before earnings drop, but yeah. I'll see you guys over there. And so again, check out the link. Again, subscribe. We're going to be covering Nvidia. And make sure it's going to pivot. So we started the Nvidia stream. Okay, yeah, we are good there. All right, guys. Yeah, I'm going to see you guys over at the Nvidia stream. I'll see you guys.